first one will be Awan Tech, Awan Biru technology. So one of the reason why we highlight, because the trend, long-term downtrend line could start to shift upward. I mean, we could actually facing at the end of the down cycle, which I think starts since March last year, March 2021. So it has been almost 2 years, and the stock apparently has built what we call that a stronger baseline since July last year. You can see series of new high-low structure was formed, and the support has been tested at least 3 times within 32.5 cents, telling you that it could be pretty much a strong support. So the subsequent new high-low structure was formed along the way since March. You can see the stock also trying to break above 200-day moving average, but there's no convincing movement yet. But we think this time with the stronger, what we call that momentum, there's a decent chance to trade much more higher. Trading volume start to improve, particularly over here. You notice a significant change in terms of overall trading volume for the past few weeks versus the rest of the 12 months ago. So this definitely pointing toward potential accumulation in this guy. Momentum, if you look on the RSI here, it just break and create a new high-low structure right above the 50-point marker, and of course above our long-term average line. So indicating that overall momentum start to shift upward. Trading volume improving, MACD also on the positive territory. Not only have breach crossover, but also trading above the zero line, indicating that the immediate resistance within 200-day moving average could be taken out. So we put our next technical target at 47.5 cents and 54.5 cents, while the support should be at 39.5 cents. Then we have a Jaya Tiasa. I think previously we did highlight the stock and hit our first target. The subsequent corrective move was seen within the so-called flag pattern over here. Those so-called flag pattern often is actually temporary or short-term corrective move within of the larger uptrend. So in terms of the trend, I think since October, the uptrend is still pretty much intact. You can see the stock continue to trade, creating a new series of high-low structure, and of course trading above the 4 moving average here, 20, 50, 100 and 200-day moving average. So a new high-low structure, 1 to 3 pattern, a solid breakout move yesterday on the back of high trading volume, MACD turned positive, and of course explosive move in RSI, indicating that the so-called momentum is actually pretty much stronger and could drive the stock higher. So we put our technical target resistance at 78.5 cents and 85 cents, while the support should be below 66 cents. Last but not least will be RCE Capital. Now there is a significant gap up and gap down move for the past few I think month, but what we like is because in despite so-called the gap here, in was rather bigger scale, it was creating for me a triangle kind of pattern, and those triangle pattern was been validated after a solid breakout move earlier on a very high trading volume. So what we seen here, a normal consolidation. Now initially I want to wait if there any some sort of pullback or something that we call return move before the stock resume, but the trading volume is actually a little bit I would say decent, and I would say in terms of the overall momentum still pretty much on the upside. So because of that, calculating the risk to reward ratio, we think the downside risk could be kept within at 1.75 ringgit, which is also right within 100 days and 200-day moving average. If this break below, that means this pattern is fair, and the bull bias will be nullified. But we want to take it as chance because the structure is quite attractive. So we put our technical target at 2 ringgit and 1 cent and 2 ringgit 16 cent. Again, support at 1.75 cent.